Good morning, small players. Happy Monday, December 6th. The general stock market has had a rough December so far, but small caps have continued being pretty hot, I have to say. Small caps sometimes tend to be seasonal. There's certain times of the year, certain months when there's really not a lot of movement. The majority of the setups are pretty much scalps. There's not, 1,000% movers every day. But for the majority of the year, small caps are pretty hot. You have at least one big mover a day, and one is really all you need. And traders sort of learn how to work around it. Like the summer months are normally slower for small caps, even though we had a very nice summer this summer, but they were, traditionally have been a little slower. It's not the worst thing in the world because traders sort of take it easy, trade from the beach, whatever, trade less hours a day. But then the beginning of the year tends to be really hot. So, it looks like we are going to continue our hot streak into the next quarter. Anyway, I figured I'll give a little explanation because we haven't really spoken about small caps in general. They don't follow the general market. Obviously, neither one of these stocks are part of the S&P 500. So, regardless of the market of what the market is doing, small caps do their own thing. That's it. They don't really follow the general market. They have their own little catalyst. They live in their own little world, which is great because we've been in a bull market now for years, but there are bear markets. They're part of the regular market cycles, and we don't really have to worry about that in the small cap world. There's always at least one stock that moves. Okay, so the first stock, the one that I just shorted, is CFVI. We've been trading this one over the past few days. I even forget what the original news was that started the move. Okay, well, it's a SPAC and it's new. So, okay. So that's what it is. SPACs were very hot earlier this year. I don't know if you guys remember, but there were quite a few we were trading. And SPACs tend to be hot when the market's overheated and everyone just tries to get money, so they're popping out of everywhere. Okay, so for this one, this level of 1545 seems to be a very strong resistance level. So I'm going to set an alert for break above 1545 so we can trade a breakout and squeeze towards high of day. Before that, it's below VWAP. It looks like it broke below VWAP here, but it got a very sharp rejection at 15. So break above VWAP is a little tricky based on past history. So maybe we'll set an alert also for break above 1505 because that could be our first mini squeeze sort of. 1505 to 1545 is good, risk reward if you just have your stop below VWAP. So I like that one. We're probably going to trade at some point today. CFVI. Okay, the next one is ACET. This one has news today. It's a pharma stock. They announced some results on their melanoma treatment. We've spoken about this. I think I spoke about it in the last episode. There's frequently going to be pharma stocks on our small cap list because they tend to have a lot of catalysts. So the high of 14 had so many rejections. This one's pretty obvious. Break above 14 is squeeze level. Outside of that, I would also trade a bounce in EMA 20 for a reversal trade. EMA 20 to VWAP has a nice risk reward. What is that? So a 5.6% move. So we can catch a 3% trade there at least. So I like that one as well. No setup at the moment, but a lot of options. This one is VYNE. It's a cheaper stock, but it hovers around 1. These penny stocks love hovering around 1. When it gets there, there's normally a lot of action, a lot of excitement. It is currently below all indicators, but it has a lot of room to higher day. So I actually really like this chart. It's just a little early for it. But I would trade a bounce on 1, which also happens to be in at 20. And then I would trade a break above 105 because, we have that chart projection there. So, and then that's a ride to 113 and higher day. So, okay, that's great. This is a warrant, so I'm going to skip it. TACO, yeah, you guys know I don't trade charts like this. It's a gap up and then it doesn't do anything, so there's no chart to trade on. This one is CYTH. CYTH. A lot of room to high of day, which is nice. However, it's sort of dying and below all indicators. So I won't even bother putting it on the watch list. I don't feel like we need to actively watch this. We can just set an alert for break above VWAP. If it ever breaks it, we can, take that trade. That would be an amazing trade to high of day, but it needs a lot of buyers to get there. Right now, it's showing a lot of weakness. Let me just remove the ones from Friday. GCP, same thing. I don't like to trade charts like this. I mean, it has a flat top on 31, so we can set an alert for break above 31. For a move to higher day, but I don't love these charts when everything's sort of consolidating in a very small range after gapping up. CNTX, we traded this one on Friday, I want to say. Not only Friday, I feel like we traded this one a bunch over the past week. But let me remove the old drawings. And then chart it. So right now, again, there's nothing really to see at the moment. It's below all indicators. For all we know, it could stay there the whole day, and not really give us a trade. But if it does break, above VWAP, obviously, we take that, right? But that's ways away. It might not even reach it. But this level of 5.7 was rejection on Friday, pretty much high of day on Friday. And then it found bottom there, had a nice recovery. The second test of support, it broke below. So I feel like a break above that level might be the first squeeze level. So break above 5.7 on CNTX. I'm going to set alerts for that. It goes above that. I would trade out to VWAP. Then break above VWAP is an add or another trade. I won't even bother putting it in the watch list because the volume is low. It's below all indicators. We don't know if it's going to happen. And if it does, the alert will remind me. I don't need to waste my time filtering through it every time I look at the watch list. This one is PRTS. This one doesn't really have news. So I don't know what it's moving on. Car parts. Maybe it's an industry move. It's on NASDAQ. They're not so strict about stocks that move without news, but the volume's sort of low still. Not much to see here. I'm going to ignore it for now. If the volume picks up, we can chart it. This one is a gap down. This one could give us a dead cat bounce move. Volume's still low for now. We can worry about it if it picks up. Express, we traded this one, I think, one day last week. Whatever day it was that it had news. Volume's still too low for right now. And these are warrants. The scanner just updated something. What it updated? Oh, Tom Z. Okay, good. This one just got news. Oh, this is, see here. Amazon store. So they have some partnership with Amazon. I read that too quickly. Okay, so they have a new product launch. Also probably some bots read Amazon's name and freaked out. Every time these small caps get news for a legit large companies, they freak out. They're so happy. And we traded this one last week too, so it's had continuous momentum. Traders know it. It's a slow morning. As you can see, all of our stocks are sort of setting up potential entries, but not really having entries. So I feel like this one, traders are going to look at. I would trade a bounce off of 2, which is also VWAP. This is a rejection of a 1-minute flag break. And normally we like to trade those on a news move. I'm actually surprised it's rejecting it. But since it is, it's probably safer to wait for a bounce off 2. And then what is the low here? 197. And this is probably better. Support 190. It's trying. And then what is the high here? 207. So that would be first profit. Then the rejection here, 213. And then the high here, 217. So those would be sort of profits off of bounce on 2. So we can trade that. I'm actually going to sign out, go to the chat room, wait for that bounce. Otherwise, you know, we had a 1-minute flag break here, which rejected at 15. If it doesn't have enough weakness to pull back to 2, we can also trade a break above 215, which will probably be more of a scalp to, you know, 219, and then if it breaks above 22, then maybe 225. Because it's having trouble even falling below, so you know it's sort of in this no man's land. We never really buy no man's land because right now there's no direction. We know sellers are strong because we couldn't move past 215, but we're also seeing that buyers are strong because we really can't make a new low. You know, this low here is 207, then we have 208, 201, so we have higher lows. Higher lows show buyer's strength, so we sort of don't have direction. Buying anywhere here is pretty much a gamble because you have a 50-50 shot it will go either way. So you want to wait for bullish momentum, which is break above the resistance level, or you want buyers to show enough weakness that we actually drop, and then when we do, we know we'll get more buyers here, and then you know that will sort of be our like I like to say, like sort of like calling in more troops, and those troops can help us break above 215 and go hit new highs. But right now, I call this no man's land. I never buy there because you don't want to buy 50-50 shots. This is not, you know, a casino. We're trying to trade setups, which makes sense. I'm gonna mark this here to 207, which is also a key level. 215, and now I'm like overcrowding my chart. Another thing, the longer consolidation takes, the more ammunition we give to short sellers because we show that we don't have enough power to break above them. So sometimes what ends up happening is if there's a very long consolidation and a breakout, it's more of a scalp trade. So we can see that now, you know, where they could potentially slam it down pretty hard. And sort of what our short sellers in the group call do a reload. This is key now, whether it will hold 15, because that was the big resistance level. So when it breaks above it, we want to see, you know, test below on it to show us support, and that shows that there's enough buyers and shows strength. So now short sellers are in trouble. Another thing to note, I spoke about this last week, but good to mention. If you miss a breakout, very frequently you'll have what we just had now. So it broke above 215, it ran up to 222, and then it dropped to 215 again to test it as support. So very frequently, if you miss a breakout trade, you can get that bounce and trade it, and you know it dropped to 215, went to 22 again. So the same trade, you got the same trade, you just traded a bounce instead of a breakout. Now this is the second test of a level. Every test of support and resistance is weaker than the one before. So a second bounce is riskier, and sometimes I do trade a second bounce. In this case, I wouldn't have because we, you know, see that short sellers are very strong. We already knew buyers were not that strong. To be more confident in this trade, we need to drop to VWAP. Or at this point, you know, VWAP has ascended, so we might not get the 2, but we might get dropped to this 207, which would be a big level. So here at 208, we need a little bit of a drop to get more buyers to be able to break above these levels. So you know, when you know the buyers are not so strong, you want to just trade the sure setups, which was the break above 215 and first test of support. Second test of support was would have been weaker and it was weaker, it broke below it. So the good thing about it is there's nothing else to trade. So you'll have buyers in here because they don't have what else to trade right now. If you're a long bias trader, nothing else is setting up a setup. Everything else is, below all indicators. So that's another thing when sometimes there's just one stock to trade and it's the most obvious stock. Everyone's trying to make money. So sometimes setups that wouldn't normally work or would be riskier sort of work because everyone's attention's on it. So that's also something to note. Now this is break above 215, same thing again. And this is why it's so important to learn the levels, because you can literally trade around the same level the entire day. You can have multiple bounces or breakouts. If you learn how to short, you can trade it on the long side, trade it on the short side. So you can literally, the stock could be bouncing between 2 and 225 all day, and you could have 10 trades and make a lot of money on it. So levels are key in trading, really. Range trading, level trading, channel trading, however you want to call it, support and resistance. Okay, so I'm going to close the video here. I will see you guys in the chat room. Happy trading.